What's going on, y'all? Hope all is well. Another episode of Convos with your CFP Mario Payne in beautiful Jacksonville, Florida. What's also beautiful? Inflation going down, down, baby. In the words of Nelly, great day. Inflation was as high as 9% this time last year in June of 2022. And now, my friends, my profiteers, it is at 4%. Before we get started, though, like always, like, subscribe, share our channel. Trying to get to a whopping 1,000 subs, but you got to crawl before you walk. As you know, I'm a CFP. I've been practicing for 16 years. I've been a certified financial planner for 11 years. Have our own app, Let Bob, being the Let Bob team, of course. You can get that on the Apple or Google Play Store, and Apple's getting to the bag, by the way. Or you can check out our ETF. The symbol is LETB, Let B, the first Black-owned AI, fully AI-powered ETF or index fund ever on the stock market. As it released last year, the market went down like crazy last year. Not our ETF, and this year, check us out. So definitely extremely blessed. But we're going to talk about inflation. Mr. Jerome Powell, you got some decisions to make. Most people think that he's going to pause rates. If he does, to the moon. Maybe, maybe not when it comes to the stock market. But we got some data that's going to show if they do pause rates, things might look pretty interesting for us investors. But let's look at the data. As we can see from Yahoo Finance, inflation, consumer prices in May rose at its lowest annual rate since April 2021. That is over 2 years ago. 2 years ago. So what does that mean? Well, as we see, consumer prices rose at the lowest pace since April 2021 as inflation slowed. Further signs of cooling. And cooling means inflation is going down. When it's hot, 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 that means inflation is going up. And we know in 2021, it was hot, hot, hot. According to the latest data from the Bureau of Labor Statistics released on Tuesday morning. Now, the Consumer Price Index, or the CPI, revealed headline information, inflation, not information, rose by 0.1% over last month and 4% over the prior year in May. A slowdown from April's 0.4 month-over-month increase and a 4.9 annual gain. My profiteers, it is happening. Inflation is slowed. Now, is inflation still high? Yes. Average inflation that the Fed wants is to be 2%. So we have to go from 4% to 2%, right? But in 1 year, from June of last year, we went from 9% to 4%. So it's possible. Will it happen in the next 6 months? We don't know. Will it happen in the next year? We don't know. But it's possible going from 9% to 4%. Most people probably would not have thought that it would have been a year to go from 9% to 4%. So as inflation slows down, that's good for employees of jobs. That's good for management of jobs, the C-suite, the owners of jobs, because of course, inflation means they get to buy more products at a lower price. Us, as we go to the gas station, that's great for our pockets. A carton of eggs, still high, but it's coming down. Things are coming down. When we have more money in our pocket, more money to spend. And since we are a consumer economy, right, we do a lot of spending that helps stimulate the economy. If we can spend more, then of course, that's going to help the stock market as well. But let's look at inflation. Look at that. Inflation continues cooling down in the U.S. So this is the U.S. Consumer Price Index year over year since 1970. Since the 70s. Look at that. Whoop, whoop. Man, look at that. It was up to 13% in 1983. Man, we thought it was high at 9%. Think about inflation being 13%. CDs back then in 1983, they were very, very, very high. The average 5-year CD in 1983, interest rate wise, was 11.5%. Think about getting 11.5% CD. Wow. Mortgages, the average mortgage was 12.5% for 30 years. Think about getting a 12% mortgage. Wow. And if you had the not best credit in the world and you still got finance, it might be 15, 16, 17%. So it's great when our savings accounts are high from an interest rate standpoint, but it's bad with inflation. that's happening now, right? We get a 1 year CD now, we might get 4%, possibly, right? 5 year CDs in my practice with some of the banks that we use, they're paying almost 6%. Like this time last year, it's unthinkable getting a 5 year CD at 6%. But then, of course, we get a car, it's going to be not 0% anymore like it was last year. So inflation helps our pockets. I don't know about that. Inflation, I think, hurts our pockets more than helps our pockets. As we can see, though, as it went down and down and down, up, kind of stagnant. Definitely, we know what happened uh, in 2008, 2009. That was my first year in the business as I was a newly minted financial advisor, late 2008. And man, that was bad times. I was like, this is what I'm getting myself into in 2008. But it rebounded. It took a while for the market to grow, but it did. And then, of course, we have boom. Look at that, man, all the way up to 9.1% June of last year. So again, inflation at 9.1%. Now today it is at 4%. So as Yahoo Finance says, although the jump of 4% in headline inflation represents a continued slowdown, it's still significantly above the Fed rate of 2% that they want. So they want 2%. So they wanted to go down even more. 9% to 4% is good. They said, that ain't good enough. That's not good enough at all. We wanted to be 2%. But it is some rumblings out there. It's going to be an interest rate pause. I know I did it on our convos with the CFP a few weeks ago to kind of talk about statistics. Back then, about 85% of individuals in the bond market thought it was going to be a pause. It's looking closer and closer that way. If it is a pause, if the Fed and Jerome Powell says, let's just pause and see what we have done already from a raising rate standpoint in the past, how will that help? Well, let me tell you, my profiteers, if it's a pause, we look forward when it comes to the stock market because the market's forward looking. If it's a pause, statistics say, even though we've had a very, very good year, things are going to get even better. Maybe, maybe not. Historically, we know nobody knows the future but God. And as a certified financial planner, past performance does not guarantee future results. But let's see. And this is great information by Montana, right? Equity returns. So basically, the past 7 times we've had interest rate hikes and pauses. What has happened 6 months after that? What's happened 12 months after that? So we can kind of see not long term, but immediate and kind of short term what happened to the market after the Federal Reserve paused interest rates. We can see 6 months after a pause, right? 1988, 25% return 6 months later, have 100,000. 6 months later, I got 125,000. I'm happy about that. 94, 20%, 20.7%. Doesn't happen and get it right all the time. In 99, it actually went down by 5.9%. 2004, 12.5%, and then of course 21% in 2015. That's just 6 months. A year after, 19, almost 20% in 1988. So it went down a little bit from 25 to 20. But are we mad over 1 year we had a 20% return on money? Hope not. Market averages in between 8 and 9. You're getting 20? Pretty good. 39% in 1994. Woo-hoo-hoo-hoo. Almost 40% in 1 year. Good Google it, Moogle it. 41% in 1997. That's what I'm talking about. But then, of course, you got 1999 to the 2000s, down almost 12%. And then, of course, we had 2004, 20%, 2015, 33%, and we don't know yet. So on average, in 6 months after the Fed pauses rates, the market averages 15.7% 6 months later. So you mean to tell me it's June right now? In December, an index fund is going to get me 15%? We don't know that for sure, but historically, that's the average. You telling me 12 months from now, June of next year, after the Fed pauses this month, which we all think they will do, I'm going to get a 23% return in the S&P 500? Wow. Who's going to say no to that? Again, the market averages 9 to 10%. Depending on what index you use, you're going to double that? Oh my goodness gracious. So that leads us to say, nothing is guaranteed from an investment standpoint. Historically, yes, over time the market goes up. We just don't know when it's going to go up and down in that bumpy road. We do know this though. If history repeats itself, has a strange way to do so, the next 6 months and the next 12 months, pretty good. What's the market at right now, though? Well, as we can see on the right-hand side, according to Market Watch, as of close of business today, S&P is now over 13%. It went up to about 7%, and then it dropped. Here we go again in March. Almost flat, but it was not. It's recovered big time since March as the economy is getting better. Now, of course, individuals are being laid off. Companies are laying off. That's not fun for people's pockets. But from an economic standpoint, because inflation is cooling, it's cooling, and inflation is slowing down, that has been good for the economy. We look up in the S&P 500, the top 500 companies in America, and one index is up by 13%. All right, Mr. CFP, so what do you mean? What does all this mean? Well, we don't know what the future is going to hold, but historically, it appears as if it is going to be a pause in rates by Jerome Powell and the federal government, 6 months from now, a year from now, probably going to be good from a portfolio standpoint. Do we want to invest today? Depends on your risk tolerance. You want to be diversified. You want a dollar cost average, as I always talk about, not put in at one time. You might get in and 2 weeks later it goes down by 3 or 4%. It's like, oh, FOMO, fear of missing out because I got in early and now I got buyer's remorse because I got out late. Ooh. I talk about that in my book, The Relaxed Investor, Conquering Fear While Building Wealth. But all that to be said, strongly recommend we look into investing. Talk to your local CFP. Go to cfp.net or holla at your boy who's a CFP. But you definitely want to think about getting to the market because if history repeats itself, the market will be pretty strong 6 to 12 months. You want to be positioned to take advantage of it. Don't put all your money in the market. I'm not saying that, but definitely you want to position yourself for good days ahead and greener pastures that come along. But hope that helps. Health and wealth is always the key. Let's make some payment profits together, y'all. Peace.
And you just wanna get paid. Tired of making the money mistakes. Make a payment on your bills and you still late. Yeah, pay for profits to help you seek change.